So after taking a short break from YouTube, I was out of the country. I thought I'd kick off my first video by answering the one question I've been getting most often, and that is, why the heck aren't condo prices falling in the Toronto area? We have a record number of listings. Condo prices have dipped a little bit, but are pretty sticky. So what's going on? And can we expect prices to fall in the future? What should be keeping an eye on? Those are some of the questions I'm going to be looking at today. My name is John Pasalis. My team and I help buyers and sellers throughout the Toronto area make smarter real estate decisions. If you'd like to meet with me and one of my agents, you can just click the link in the show notes below or send me an email at askjohn@movesmartly.com. Now, before I kind of jump into the question on what is going on with prices in the condo market, of course, I thought I'd take a quick look at some of the monthly statistics for the Toronto area's housing market. One thing I'll note before we kind of jump into it is that our statistics, of course, are based on feed data we get from the Toronto Real Estate Board. And sometimes our stats don't line up perfectly with what is in their reports. We have slightly different methodologies. We kind of cross-check ours against what's in the MLS system. But this month, I mentioned that because our data shows that sales are down slightly. The TREBS Market Watch report shows sales are up, but our numbers are pretty consistent with what's in the MLS system, so we're kind of going ahead with that. Sometimes there are inconsistencies, so I'm not sure why TREBS Market Watch reports last year kind of understated sales figures. Anyhow, moving on. If we look at, as always, I'm going to look at the statistics for houses, for condos, and for the rental market. So if we look at houses, the number of sales in the GTA down 4% year over year, just over 3,300 sales. That's pretty soft volume. It's in line with the previous couple of years, but the previous couple of years were pretty weak sales volumes. So again, relatively sluggish market right now. When we look at the number of new listings, that's up 14% to about 9,100. And active listings have surged. Again, active listings are a function both of new listings and sales. If sales are soft, even if new listings are up a little bit, we can see this rapid surge. And that's why active listings are up 41%, just under 13,000 active listings. Now, when we look at the balance in the market, we typically look at something called the months of inventory, which looks at the active listings, so about 13,000. And we divide that by the number of sales in a month, and that gives us an idea of how quickly it would take all the current inventory to sell. And if we do that, we see that we have about 4 months of inventory, 3.9 months specifically. And this is a sign of a market that is cooling down as inventory increases, things cool. And we can kind of see a lot of volatility over the past 10 years in inventory. When it was trending down leading up to the pandemic, that's a market that's heating up. And then since then, we've seen it kind of cool down, heat up, cool down, heat up. And now we're definitely in a period where things are cooling down, and we'll see how long that lasts. The percentage of homes selling for over asking dipped again to 30%. Again, this is a metric that just gives us some sense of how competitive the market is. When the market's slower like it is today, you can't just price everything below market value and expect to get a bidding war. That doesn't really work. Only the nicest homes end up selling for over asking when the market's cooling, and that's what we're seeing today. Average price is down 1% year over year to 1.338. And that's a little bit on the market for low-rise houses. I'm going to take a quick look at the data for condos. Condo sales as well, down 7%, just about 1,900 condo sales. Number of new listings for condos up 21%, so about 6,500 new listings for condominiums in the month of July. And active listings, and this is kind of the big metric we've been talking about and we've been seeing in the news. Active listings, again, hitting a record 10,688 number of units available for sale. That's up 57%. And again, record number for any month in any given year in the GTA. Now, when we look at the balance in the market, again, months of inventory has been inching up. It's 5.8 months for the month of July. It's a little bit higher than that for the city of Toronto because the market is a little bit more sluggish in downtown Toronto than some of the suburban markets. But we got 6 months of inventory basically now. relatively few homes selling for over asking, and average prices down 3% year over year, 736, 850. Now, I'm going to take a quick look at the rental market. Obviously, this is relevant for anyone who's renting, anyone who's an investor, to take a look at what exactly is going on. We look at the number of new leases last month. That's up 29%, just under 8,000 new leases. And again, we can kind of see in the red line that the lease volumes have been picking up. Again, part of this has been fueled by the fact that there's just more units on the market to be leased. And the market's obviously not absorbing all of them right away. There is a bit more inventory now than in the past. But again, 30% growth in rentals is a decent number. The number of new rental listings sitting in the market up 37%, just under 10,000, which is a pretty big number. And again, active listings for rentals are up 98%, nearly double what they were last year, 7,851. And average rents are down slightly, about 5% year over year, 2,800. They've been picking up month over month, but that's pretty typical because we have some seasonality in the rental market. This is the busiest time of year. So we're going to have to see how the market unfolds in September. And again, this is the busiest time of year a lot of times because, students are looking at rentals. People are kind of looking at moving in for September. So summertime tends to be a relatively busy time for the rental market. Now, kind of going back to our original question, why aren't condo prices falling? We have a record number of listings on the market. The first thing is something I kind of touched on our latest real estate roundtable, and this idea that there's certainly a lot of psychology behind sellers' expectations. Prices, we say, tend to be sticky on the way down. That's usually because sellers are stubborn. They would rather wait for the price they want rather than reduce. And in particular, in today's market where prices have dipped a little bit since the highs, sellers even see selling at today's prices as a loss because they're anchoring their gains or losses against the peak prices rather than what they paid for their units. And again, this is just typical kind of behavioral trends in the housing market that influence people's decision making. So that's partly why we're seeing a little bit of stability in prices in the GTA for Toronto's condo market. Now, having said that, we got to look at the data as well. And to look at the data, I wanted to look at a slightly longer time series, about 10 years, but to get rid of the seasonality, sort of these peaks and valleys in sales and listings, because the spring and summertime's busier, January, December's a little bit slower. What I've done is I'm looking at all of these numbers using what's called a 12-month average, rolling average. So basically, it looks at, if I'm looking at the number of sales today, I'm looking at the average over the previous 12 months. And then next month, I'm going to do the same thing, look 12 months back and take the average. So that just removes the seasonality, these kind of peaks and valleys. Of course, you're not to see all the sensitivity. But again, I think it kind of gives us a better idea of longer term trends. So that's what we're going to be looking at. So this first chart looks at the number of active listings in the GTA since 2013. And we can see basically the 12-month average just over 8,000, highest it's been, and moving up. So definitely we're seeing this in the data. Inventory is accelerating. We are well above volumes since 2017, but only kind of modestly above the inventory levels since 2013 and 2015 in that period, which I thought was quite interesting. Back then we had roughly on average 7,000 units available for sale. Today we're 8,000, but we're 10 years later. So when you look at it with that context, doesn't really seem quite as alarming. But again, well above recent volumes, which were a lot lower in the 4 to 5, maybe 6,000 units on average per month in terms of active listings. So when we think about active listings can be building for a couple of reasons. I mean, number one, obviously, if new listings are surging, that is going to contribute to potentially a buildup in active listings. But even if new listings are steady and in line with historical norms, if sales are plummeting, well, that means just fewer people are buying units, which means that of all the new listings that hit the market each month, fewer of them are actually selling. And this can contribute to a buildup in inventory or a buildup in active listings. So when we look at the number of sales over the past 10 plus years, we can kind of see that sales today, and in fact over the past year, have been pretty much at their lowest level in the past decade, and very close to 20-year lows. On average, 2,000 units per month selling. At the peak of the market, we're around 3,500. Normal might be closer to 25 to 2,600 units a month. So that is a decent volume of units, and obviously a big shift in the market. And again, this big decline in sales and in demand is largely driven by high interest rates. Both end users can't afford to get into the market in many cases, and investors have moved to the sidelines. So this has really put a chill on demand, which is kind of allowing inventory to build up. Now, when we look at the number of new listings over a longer horizon, again, we're seeing listings, so new listings trend up, over the past year and a bit. But again, not as high as it was in the peak, not insanely high either. I mean, slightly above, we're probably in the mid 5,000s, 5,500 new listings per month on average. In 2021, we were close to 5,000. 10 years ago, we were just under 5,000. So although it's high, it doesn't seem as high. The discrepancy, in terms of comparisons to historical trends, certainly looks like sales is kind of the bigger issue. That is sort of at a pretty much an all-time low, or a 10-year low, whereas new listings are trending up and not as at the same rate, or the difference isn't as significant as compared to the change in sales volumes. So now when we think about why, condo investors are kind of sticky on their prices, and I'd say I think one big factor is that many investors are looking at this data, and we looked at months of inventory before. In the past 2 years, we've seen these peaks and valleys where market cooled down and then things accelerated again, and then they cooled down and then accelerate again. I mean, even in the past year, the market was soft last year and then accelerated again beginning of this year. So we've seen these peaks and valleys, and I think a lot of owners and investors are thinking, okay, this is just a short-term trend we need to wait out. And I think when we look at headlines, investors see headlines like this, BMO forecasting Bank of Canada will be cutting rates to 3.5% by January. That's a full percent from what it is today. And it leads them to be optimistic that the market will rebound, and this will drive more buyers into the market. Of course, the subtext to this story is that BMO's forecasting that because our economy is doing a lot worse than what policymakers were hoping for. But that's, a separate issue. Most people hear lower rates, they think more demand, more people are going to buy homes. So a lot of people are thinking they just need to wait this out. Maybe the fall, things might pick up a little bit, but at a minimum, they think things will rebound in the new year. So, and again, this isn't my case. This is just my kind of, when I speak with investors, this is sort of the sentiment that I hear, that this is a short-term trend that they need to wait out. And many of our own clients are looking at basically taking some of their units off the market and renting them out, rather than reducing their prices. So I think this is kind of one of the reasons why things have been pretty sticky. Now, will condo prices fall? And again, I think this is an important question I keep getting. Obviously, I think this channel would be more popular if I was kind of doom and gloom and said, yes, they will. But the reality is, I don't know. It's very possible they might. It's very possible they won't. It's possible they just might be modest. And I think here's a couple of things to keep an eye on, and things I've been talking about. If inventory continues to build up, if sales remain sluggish, even with rate cuts in the fall, and there are a decent number of investors who needs to sell, effectively distressed, they can't carry on, they can't hold their units, they need to slash their prices, this may lead to some decline in prices. It's very possible and if it happens, it might happen in the next 5-6 months. If we see that happen, inventory continue to increase. So that is definitely one possible outcome. And again, I think it just depends on how many investors need to sell, need to get to the market, can't wait, and what happens with inventory levels. And of course, the inventory levels will be a function of how many investors are listing for sale, and how many buyers are in the market. Now, when we think about the new listings, again, the other, I think, important metric to talk about is, or thing to be keeping an eye on, is how many investors and owners just decide to rent out their unit. And this is something that I've been hearing and seeing more of, I think I mentioned. You know, and again, if we start to see more investors pull their units off the market and rent them out, that might, you know, obviously take some pressure off of the downward pressure on prices. You know, it might lead to a little bit more stability in the short term. And I think one thing I looked at as well in this data is sort of compare the number of new listings for rentals versus for sale in the GTA. And when we do that, we can kind of see rentals here in red, units, again, these are condo rentals versus condos for sale in blue. And while the new listing growth has been pretty high for sale units, it's been even more rapid for rental units. And again, part of this is driven by a high number of completions. But I think the interesting story here again is while we see a lot of investors exiting, there are tons and even more who are just holding on to their units. So while there is a bit of an exodus, the fact is the majority are just holding on and renting their units. And obviously, all of these 7,000 are not new units. Some of these are just units that vacated and tenants moved out. So a lot of investors still holding on. So again, I think that's going to be the interesting trends to keep an eye on. If many of the units and unit owners today just decide to rent out their units rather than sell, that's going to take pressure off of prices. You know, maybe fuel a little bit more inventory in the rental market, so we'll see less rent growth. But again, I think these are the interactions that we need to be keeping an eye on in the months ahead, and some of the things that I'm going to be keeping an eye on. Hope you found the video helpful. If you have any questions or comments, please post them in the comments below or send me an email at askjohn@movesmartly.com.